I'm Pelshia, moderator for the conference call. Welcome to 5Paisa Capital Q3FY23 earnings conference call. We have with us today the management of the company. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the call to the management. Thank you, and over to you.
A very good afternoon, everyone. Myself, Prakhar Jagdani, CEO and whole-time director of 5Paisa, along with my colleague, CFO, Mr. Gaurav Munjal, welcome you all for our Q3 FY23 conference call. At the outset, I would like to wish you all a very, very happy new year. I wish that the 2023 may be much better than 2022. Friends, the quarter 3 FY23 was more of a mixed bag if you look at the overall market. On one hand, Nifty touched an all-time high of 18,847 on 1st of December. But on the other hand, the new demat account growth slowed down. So we're seeing some fatigue in last 2 to 3 quarters. As an industry, we opened almost 55 lakh demat accounts, which was 10% less than what we opened previous quarter. On one hand, derivatives turnover improved by almost 19% quarter on quarter, but our cash market turnover at an industry level was down by around 1.5%. We also saw regulatory implementations this quarter, like the running account settlement of clients that started in the first week of every quarter now. We did our first part in the first payoff on 7th of October, and the second happened just now in January. But as a company, we have fared well in Q3, also on an overall 9-month ended December 22 basis. Our revenues for the 9-month ended December 22 stood at around 248 crores with a growth of 18% year on year. With a PAT of 29.1 crore, a growth of 212% year on year. Even on a quarterly number, for Q3 FY23, our revenue grew sequentially by 4% to 83.8 crores, and PAT grew by 2.6% to 11 crore. In our expenses for this quarter, we also had a one-time expense of 7.09 crore towards margin penalty reversal, a regulatory requirement. But that is a one-time expense, and we did that in this quarter. We have also maintained, despite all this, we have maintained a profit margin of 13%. Our growth in profits is on the back of improvement in our acquisition quality, superior trading experience, and a further reduction in CAC of around 9%. We have not just improved our ADTO by around 36% from 1.69 lakh crore to 2.05 lakh crore, but we have also improved our market share. Our strategy of focusing on revenue and profitability by acquiring good quality customers has started to pay dividends. Talking about our product, in my last investor call, I had mentioned that we were launching a dedicated trading terminal for derivative traders. We call it FNO 360. I'm happy to report that our product, which is right now still in a beta phase, is receiving good traction and reviews from our customers. This terminal, along with our other initiatives, have helped us to improve our derivative market share. Apart from our regular business, our boards of both 5Paisa Capital Limited and IFL Securities Limited approved acquisition of online retail business of IFL Securities by 5Paisa Capital. With this, we will acquire close to 1.5 million customers who are part of our online retail business of IFL Securities. This customer base will boost our overall client base by around 40%. We expect a good revenue growth and also profitability with this acquisition. The acquisition will be effective 1st April 2023, and right now we are undergoing the procedural and regulatory process, which we hope to complete in 8 to 12 months of time from the time we filed to the exchanges and the other regulatory authorities. For now, I have this as my opening speech. I request everyone to have, if you have any questions, you can go ahead and ask. May I request operator to open the question and Q&A session?
Sure, sir. Thank you. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Rishikesh Oza from Robo Capital. Please go ahead.
Hello. Hi, sir. Thank you for the opportunity. So my first question is the average daily turnover. If you see, has actually doubled year on year, but our revenues is flat year on year. So if you could please explain this.
Sure. See, this is so ADTO not necessarily mean transfer, completely transforming into the number of orders. As an organization, as a discount broker, we charge on per order basis. Now, when you attract a good quality customers, they also come with a high ticket size, and also their the per order value is also more. But then because only charge on a per order basis, you may not see the same amount of revenue increase as the ADTO increase. So broadly, that's the reason.
Okay.
And typically,
my second question.
No, I would say just typically if you see that why large traders are attracted towards discount broker is because of the cost benefit. So that's why you see a difference between the revenue growth and also the ADTO growth.
Okay. And so my second question is about ARPU. If you could please provide ARPU for the customers, that is total customers also, and even for active customers.
So currently we have around 83.8 crore is our revenue. If you can, and our customer base is approximately 33 lakhs. So you can do your math and get the ARPU. On the NSE active, we are approximately 10.75, 11 lakh active customers. So again, you can look at the ARPU for the quarter and analyze it.
Okay, that is noted. Okay, sir. And so what is our total employee count?
We are in the range of around 700 to 725 employees as of now.
Okay. And what is our marketing cost for this quarter versus previous quarter?
So it is a relevant presentation. For the last quarter, it was 12.2 crore, and in this quarter, it is coming 11.6 crore.
Okay. Thank you very much, sir. Thank you.
Thank you. Next question comes from Manish Otswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. I have a question on our cost of acquisition of customers. So that has declined very sharply from quarter 1 to quarter 3. So how much cost this the current the cost level are sustainable, or do you see again this will pick up? And the second question related to this, of our total operating cost structure, what proportion of cost is variable piece of the total cost?
So talking about the CAC, we were last quarter approximately 574, and this quarter we are at 525. But I have said in my previous presentation that we were optimizing on the acquisition cost, and more or less that exercise is over. I see the cost hovering between 500 to 600 rupee. On a higher side, it would be approximately 600. But we see this range to be maintained in the coming quarters, and I don't see a significant downside or upside beyond this.
Answer to your second question, so out of 100%, so if I get 100 rupees as a revenue, our cost of acquisition is 10%, and the rest 90%, 15% is our PBT, and rest 75% is our other expenditure.
Okay. And secondly, you said in your commentary the industry level demat account acquisition slowed down in this quarter, and secondly the cash volume is also down quarter to quarter. So what I read in the media reports that the discount brokers gain in this space both in the cash market and day to market. So what is your comment on that piece?
If you look at last 2.5 years, there has been a phenomenal rally in terms of the opening of demat accounts. Now, as a country as a whole, we are almost at 11 crore demat accounts. So a bit of fatigue was bound to happen, and it is not just in this entire year. If you see that there is rather from Q3 last year, there has been a drop in terms of new demat account. So at one point of time, we had opened around 4 million demat accounts in a month. And now, we are in the range of around 1.5 to 2 million demat accounts in a month as an industry. So I think that fatigue was bound to come, and that is the reason you see a bit of a demat account slowdown. Secondly, as compared to the cash market turnover, cash market turnover broadly is an indicative of how the overall markets are performing in terms of returns. Now, if you look at the entire year of 2022, the index has gone up just by 4%. Even in the current quarter, though we have touched an all-time high, but if you look at overall indices, they've gone up by 5.8%, which was lesser than what it was last quarter. And if you look at overall year, it is more or less 4% kind of a growth. So when you have markets stagnating in terms of return, the retail participation slows down, and that automatically has an effect on the cash market turnover. So that is the reason why it is down.
Yeah, and secondly, in terms of customer acquisition run rate, so currently the run rate is 1,62,000. So where this trend will stabilize in your assessment?
So for us, because we are anyways not acquiring as many accounts as the industry does, and we are focusing in terms of quality, I see that our acquisition run rate will be in this range of around 1.5 to 2.5 lakh account on a quarterly basis. So we would be in this range, but it is difficult to actually say whether there would be a significant upside or a narrow range of acquisition, because it also depends on the market. Secondly, we also have initiated our branding exercise to cater to a quality audience and quality customers in across the country. So I'm sure our branding exercise, our partnerships, and also our acquisition channel will help us to acquire more customers. So though I feel it would be in broad range, but I would be you would be happily surprised if we surpass our original numbers also, earlier last 2-3 quarter number also.
Just last bit on this. When you say the quality customer, what are the 2-3 core metrics you look at it to qualify that customer is quality in your opinion?
Yeah. So, though there are various parameters, but typically what we look at is that one is that whether the customers who are coming are actually trading. So what percentage of my trading customer acquisition customers are trading? Second is approximate what is the margin with which they come, and third is the payback. So the acquisition cost that I'm incurring, to what extent to how soon we are able to recover that acquisition cost. So I think these are the two, three parameters basis which we decide in terms of the quality of customer.
Thank you, sir, and answering all the questions patiently. Thank you.
Thank you.
Thank you. Next question comes from Kajal G from ISEC. Please go ahead.
Hello. Hi, sir. Hi.
Hi, Kajal. Good afternoon.
Good afternoon. Sir, the one question was on the decline in the active clients, which is right now the industry trend also. How do we see tackling that? Because the decline in effect has been quite sharp in last maybe 6 months or so. So how do we tackle that, or are you okay with whatever you have shared at this point in time, and any reasons?
Sure. So Kajal, I feel that the active client was anyways not a great matrix to see, because that's the only industry publicly available data. That's why it's obvious that we draw reference to that. But I think it is not a right number to look at. What we should look at is the income growth, the turnover growth, and the profitability growth. Now, if you look at, and one of the biggest factor for active client is the markets. So because if you look at, there has been a negative overall at an industry level, the active customer base is degrowing for last 2-3 quarters. But is it translating into a degrowth of revenue? Not. Why? Because a significant portion of the revenue, even for most of the brokers, including us, comes from derivative segment. Now, in derivative segment, if you look at the turnovers at the exchange level is going up. So even in volatility, even in a bad market or a good market, derivative traders are able to make themselves active. They are able to trade, find opportunity. So that is translating into revenue. So I think a good way to look at if there is a revenue growth and a profitability growth.
So whoever F&O clients which you had and were trading continued to stay, and whichever was not is getting out of the system. Basically,
so we are. Yeah. So what we are seeing is that obviously, I mean, that's a normal cycle of people who are coming to derivatives, and people who end up making losses, they go out. But the good trend is that we are seeing an increment in the number of customers who are trading on derivatives, and that this number is increasing quarter on quarter. So despite the entire year, the indices were flat. And there were peaks and troughs even during the year in terms of the market participation. But if you look at one matrix, which is that ADTO in the derivative segment at exchange, that barring maybe a month or two, which was stable, not degrow, more or less it has grown. So we have seen both increment in the ADTO, increment in the number of customers trading in derivative.
Because for you incrementally, even if the clients, active clients have not grown, you have been able to be there on the same brokerage revenue and other income. So what will be interest income component for you in this quarter?
Interest income component 44 crores is coming. So that's called other operating income.
The entire other operating income is interest income?
No, that are you asking about the treasury income, or you're asking about the interest income on the MTF?
Margin funding interest.
Margin funding income is in RQCT. It is coming in the allied broking income. So our allied broking income is total is 27 crore. Out of this, that MTF income is coming 15.3 crore.
15.3 crore around, that is the margin funding. And what will be that number in the previous quarter?
That was 13.3 crore. So it has been gone up. Yes. Mainly because our client funding book has gone up by from average 246 crore to 280 crore. And hence you can see the growth in income in MTF income.
And do you see the pressure of rising cost of funds for you? Because I think you may not have changed your lending in MTF rates.
So there is a slightly increase has been made by the banker. But up to the extent of 300 crore, we are well versed with the 200 or 250 crore with our internal network, and so it will not impact to that. But going forward, yes, it may impact our finance cost if the book has gone up from this level.
Okay. Okay. And you said your cash turnover has been 5% decline quarter on quarter, right? 3%.
Broadly in this around 3 to 4%. Yeah.
Okay. Okay. Thank you. Thank you very much.
Thank you.
Thank you. Next question comes from Deepak Sonawane from Itong Securities. Please go ahead.
Thank you for the opportunity, sir.
Hi.
So for the quarter,
I'm sorry to interrupt.
Deepak, we are not able to hear you. If you can be a bit louder.
hello, am I audible?
Yeah, Deepak, we are not able to hear you. If you can be a bit louder.
Am I audible now?
Not actually.
Hello?
Yeah, much better. Yeah. Please go.
Yeah. Sorry. So my first question is regarding cost of acquisition. As you reported, ad spend and ad and marketing spend for the quarter, it is declined by 5% quarter on quarter. But as against our cost of acquisition only for marketing, we have seen a very sharp decline, right? So it is around 25-26%. So am I missing something? In that degrowth for the CAC only for marketing?
Sure. So our customer acquisition cost does not include the branding expenditure. Because so that is the reason. So if you look at our overall advertising and marketing cost in our P&L table, that includes marketing, that includes branding, but our CAC doesn't. Yeah, that's why there is a.
Yeah, and the branding, within our marketing cost that we have reported for the quarter, how much percentage will be branding? Of 11.6 crore.
So if you just multiply the number of customer into the CAC, the branding cost, that will be the actual advertising. The balance would be branding.
So the actual for the last quarter branding was 4.3 crore, and for this quarter it is coming 7.5 crore.
7.5 crore. And that branding is mainly digital, right? And nothing else.
Yeah, broadly, yes.
Okay. Sir, and within our allied broking income, that we have said that majority is interest income on MTF, and do we include interest income on float in the same allied broking income, or else in other operating income?
So that's a part of our other operating income.
And what will be the quantum for that?
So other operating income, approximately 90% income in other operating income is pertaining to interest income.
Yeah, and we've mentioned that it's 15.8 crore for this quarter.
Yeah, got it. And sir, reversal, so this is one-off, right? 17.9 million that you reported for the quarter, the reversal of margin payments. Yeah. So do we see that there could be impact in coming quarters as well? This is the first.
No, I don't know. There is no, because this was these were the penalties which were required to be refunded from October 21 to September 22. Okay. So that's the reason it was a one-time effect. Post that, these numbers will not come back, and that was just a one-time effect. That's it.
Okay. And sir, regarding our CAC again, and that CAC means other OPEX I'm talking about. So that has gone up, right? 222, 269 per new client acquired. But and that should mainly include your onboarding team salary, right? That you have mentioned in PPT as well.
Yes.
But if I see our employee cost, right? So that is kind of very flat, right? 146 million to 149 million. So is there any other parameter that is driving this OPEX, cost of acquisition, other than marketing?
No, actually not, because see what happens is that marketing CAC always comes down first and that is followed by the OPEX cost, because OPEX is more or less people. So you sometimes, if the acquisition is down, I can't we can't remove the people, and if the acquisition is good, we can't again hire the people. So that is a small difference you'll always find in the OPEX, which is a non-marketing. That's on the one part. Secondly, on the employee cost, obviously that includes, and now a significant part of our employee cost is towards the product and technology team, because that's a bigger chunk, and that's why you might see a small increase here and there because of the hiring in the technology and the product space.
Okay.
But broadly, the reason, the answer to your question of why it has increased is because obviously the people were there in Q2 and Q3. It's just that the number has gone down, so that has an impact on the CAC.
Okay. Yeah, I mean, that is highly linked to your new client acquisition, right?
Absolutely.
Yeah. So my last question on CAC is, earlier we reported that our payback period is around 20-30 months. So do we holding this payback period metric even in Q3 as well?
Actually, our payback period was not 12 to 13 months. It was always in the range of around 8 to 9 months. Now it has improved a bit. Now we are in the range of around 7.5 months.
7.5 months. So that improvement is for the 9 month or else for the quarter?
It is for the quarter I'm talking about, yeah.
Okay. And you see that with CAC hovering around 500-600 per new client acquired, and
yeah.
if you see that the market remains silent, that means our broking income could be remain flat, right? So do you see that the payback period holding up next 12 months as well? The 7 to 7.5 months, 5 months per.
So we are our internal expectation is that the payback period should reduce further.
Okay.
Target is that we should be in the range of around 5 to 6 months as a payback period.
Okay.
So we're working towards that. From 8 to 9, we have come to 7.5. It will come down further. But that will be by improving the quality of customer in terms of revenue, and not by reducing the acquisition cost further.
Okay.
Yeah.
All right. I think my last question is on
Thank you.
The number of.
I would recommend if you can come back, because there would be other people also asking questions.
Sure. Yeah. No worries.
Yeah. Thanks a lot. Thank you.
Thank you. Next question comes from Alok Kumar from UTI. Please go ahead.
Good afternoon, sir. Congratulations for the result. Hello?
Yeah, hi.
Yeah.
Please go ahead.
Yeah, just wanted to know your market share in the derivative market.
So right now we're in the range of around 3.2%.
Okay, and what was it last quarter?
We were somewhere around 3.12, 3.14%.
Okay. And is there a possibility of increasing the broking rates in the coming quarter, probably in the coming financial year?
That's a good question. See, the kind of regulatory changes that we are seeing is pushing cost of operating business, higher with every quarter. And now with the changes, I see that the rates, for the discount brokers at some point will definitely increase. Whether it will happen in the next 2 quarters or maybe by end of next year, that's something that we need to see how the changes go. But compliance costs, regulatory costs, other costs have significantly gone up. And with the acquisition growth getting stagnating, and markets also now in not a very high growth trajectory, I think that will put more pressure on the cost. So there I see a very high chance of brokerage rates going upward in near future.
How much is it expected to increase? Like around 20 to what figure are you expecting?
It's actually difficult. It's really difficult to comment whether it will be a 10% increase or a 20% increase. It all depends that what kind of regulatory changes will come in, and what part of the income will get impacted. I mean, we've seen that when the markets turn bad, 20 to 30% revenue impact is normal. I mean, because we are a cyclical business. Plus, if there are other changes which may tomorrow impact our treasury income. So we'll have to see that what is the impact, and accordingly it has to be factored in the cost in the brokerage rates.
Okay, sure. And sir, my last question is, so what is the growth trajectory in in terms of the customer acquisition for the coming year, or say coming quarter? So is it expected to go down, or is it expected to increase, or remain constant?
So as I said, we are expecting our acquisition number to be in the same range. So we are acquiring close to 1.5 lakhs, 2.25 lakhs. That's a broad number. So all give and take close to from maybe around 7.5, 8 lakh customers to 1 million customers. So that is the range of acquisition that we are looking at, and I see that we will continue to do that. We'll continue to acquire in this range, and this is something that I'm not factoring. The 1.5 million customers that we will acquire from the acquisition. That's separate. This I'm talking about our normal acquisition.
Okay. Thank you for your time.
Thank you very much.
Thank you. Next question comes from Deepak Podar from Sapphire Capital. Please go ahead.
Hello.
Yeah. Hi, Deepak. Good afternoon.
Yeah. Hi, sir. Thank you very much, sir, for the opportunity. So I just wanted to understand, you mentioned that about 7 crores odd was a one-time expense in third quarter, right? Because of the margin penalty.
Yeah.
Okay, so if we adjust that, I mean, our EBITDA stands at about 35%. I mean, EBITDA margin, if we adjust that 7 crores one-time expense in this quarter.
So actually, we need to check. So actually, EBITDA is not a right measure to calculate in our business, because our interest cost. We are using interest cost for the funding book. So our income and expense both are coming. So our finance cost is not for the other than operating purpose. It is for the other purpose. So the best way to look at it, our PAT margin.
Yeah, that's fine. I mean, let's say PBT. So our PBT, which is about 14.7 crores, the adjusted PBT is around 20.
That would be around 26%, and not 36%. Around 26%.
No. So I got confused. 26% is what?
So if you remove the one-time expenditure of 7.09 crore towards the margin penalty, if you exclude that, then our PBT margin would be around 26%.
Correct. I understood. Yeah. Which is about 21-22 crores. That's right. But that's just a very sharp jump from what we have been seeing last 3-4 quarters. I think our PBT margin went up from 7% to 12%, and then 18%, now 26%. So how do we see that? I mean, is that a sustainable PBT margin that one should look at going forward? I mean, given the kind of business, how do you see that?
Digital businesses, across always command a high PBT margin in a steady state. And right now we are not into an early startup kind of a phase where we would be into losses, or we've just come out of a loss. So in a steady state, my target, for a foreseeable future is to be in the range of around 35 to 40% as PBT margin. So that is what our aim is, and if you look at our quarters, we are, in the right direction to achieve that number.
Okay, fair enough. So steady state, we are looking at 35 to 40%. This quarter was about 26% on an adjusted basis. Hello.
Yeah. Yes.
Hello?
Absolutely.
Okay, great. And I mean, the steady state, how many quarters we are looking at to achieve that kind of steady state margins?
What we are, and how this 35 to 40% of PBT margin will be achieved is, obviously we are working on improving the quality of customers. That will increase our ARPU. We are working on reducing the CAC, which we have already seen. Then what happens is that your technology cost and your other fixed costs do not go up in tandem with the revenue growth. So that is how it will take at least 3 to 4 quarters or 5 quarters to reach to that number. And in last year, we had also completed, and more or less by last quarter, we have completed our, the investments that we wanted to do in technology. So as far as cost is concerned, we are more or less, there in terms of fixed cost. I don't see a much increment in the cost. And now it is only revenue growth. So the moment the revenue growth happens and the ARPU grows, our PBT margins will grow. So I look at around 4 to 5 quarters to achieve that number.
Okay, fair enough. But you spoke about the revenue growth part as well. But I think last 4-5 quarters our revenue has been quite stagnant in the range of 80 plus minus, right? I mean somewhere around 80 crores is what we have been seeing in last 5 quarters. Now when we say 4 to 5 quarters to achieve that kind of PBT margin, what is the revenue assumption you are taking there?
If you look at, I agree that in last 4 quarters the revenue has been stable, but there was a reason to it. There are a couple of reasons. One is, in 2021, if you look at our acquisition trajectory, that was at a very high number. But we realized that this acquisition, just for the sake of acquisition, is not enough because a lot of customers are not trading. So we changed gears. Now, whenever you change your gear from a very high acquisition trajectory to a low acquisition trajectory, it has an impact on your revenue because there's a run rate at which you are growing. Second, that coupled with the market scenario. So this put together is the impact that you see on the on the revenue. But now with the kind of acquisition that we are doing, with focus more on quality of customers and derivatives business as a whole, I see that the number will increase. But right now, for me to give you an exact number in terms of what will be my revenue 4 quarters down the line won't be a right way to look at it.
Okay. Fair enough. Understood. And my last question is like our active to gross client ratio. I mean, it had been stable at around 60% plus minus, right? But lately, I think for last couple of quarters, we have seen a stark decline. I mean, from 60% to maybe 33% right now.
Yeah.
So,
absolutely.
Is there any effort we are doing there to kind of improve that particular ratio? I mean, do we see that as an important parameter for us to track, right? I mean, higher ratio means more business and more orders, right?
Absolutely. So definitely we do our internally we run our analytics and we do a lot of effort in terms of reaching out to customers and activating them. But when you see this, the degrowth in the active clients, again, that's a factor of acquisition that you do, because this number is basically clients who have traded in 12 months. So if I have acquired for 2020 and 2021, that the acquisition number, and suddenly from a 2021 last quarter Q3 calendar to Q4 of 2022. We saw a net reduction in our acquisition. Now that also on a rolling basis has an impact on the active clients. So that is why I was telling to one of the the analysts that we should right now not look at active client as a right matrix. Though obviously on an overall base it is important that how many clients are trading, but markets acquisition change has also impacted the active clients. So maybe for a quarter more that won't be right, but then it will then stabilize and you'll see an increase after 2-3 months. And that's pure statistical exercise that you can do.
Okay, fair enough. I understood. That's it from my side, sir. All the very best.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Sumit Jankar from Motilal Oswal. Please go ahead.
Thank you for providing me the opportunity. My question.
Sumit, I think we lost you.
Am I audible?
No, we lost you. If you can repeat your question.
Okay. So my question is, what is current cash market share and what is the proportion of cash and derivatives in terms of revenue?
Our cash market share is approximately in the range of around 2.7 to 2.8. And our derivative is around 3.2. So that's broadly our revenue share. But in terms of our revenue breakup, broadly 65 to 70% of our revenue comes from derivative and the balance from cash.
Okay. So you mentioned that you are launching that FNO 360 app. It's a very good initiative as maximum proportion of revenue is coming from derivatives. So how do you differentiate, like now current clients are also trading in derivatives. So how does this FNO 360 app differentiate from current trading experience for clients?
So as far as platform is concerned, the reason why we created this entire terminal is that we have seen that people who trade in derivatives are broadly, trading only in that segment, where, rarely and in a very less number of time they come on a normal terminal. So we wanted to give a different experience. So there are a lot of data points. So as far as customer is concerned, there is no difference between the customer trading on our normal platform and FNO 360, but the experience on that terminal is much better than a normal because there are a lot of data points that we provide. There are a lot of predefined strategies, a lot of types of orders, which typically are used by derivative traders. So it is basically to improve the experience.
Okay, got it. Thank you, sir. Thank you for providing me the opportunity.
Thank you very much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Tushar Sarda from Atana Investments. Please go ahead.
Yes, thank you. Thank you for the opportunity. This is the first time I'm attending the call, so I'm just trying to understand the business. You talked of quality of clients, and when I divide your broking revenue by the total customer, it comes to 100 rupees per quarter per client. So I'm just trying to understand, what kind of clients are this, and if a client is paying only 100 rupees, why do you have to spend so much money to acquire a client?
This is an absolutely right question, and that is exactly the reason why we moved away last year from acquiring broad customers to acquiring quality customers. As I said, we started that journey from Feb, this last 2022, and then it takes some time to change your course. But if you look at that, if you divide purely revenue by the number of customers, it has many factors associated with that. One is that you're looking at just one quarter revenue, which also, or rather last 2-3 quarters, which has a market impact. Secondly, it also is a factor of a large customer acquisition that we have done in 2020 and 2021. And most of these customers were millennials and young people in the range of 18, 20, 25. Now when the markets become choppy or they turn sideways, typically the kind of money that these people have to invest is very less, and they shy away from coming to market. And that's the reason when you divide it by the customer base, you will see a very small number. But that may not be right, because if you take the active customers only, then the number will be significantly better. And that's
but
one more reason that why
doesn't mention active customer, right? I will look at the numbers that you report, and you reported total.
Yeah,
customer.
Absolutely. But
So
that's the reason I'm giving you the explanation for.
Yeah, but then maybe you should include that in your presentation. The parameters that one should look at.
Sure.
Okay, thank you.
Thank you.
Thank you. Next question comes from Krishnendu Saha from Quantum AMC. Please go ahead.
Yeah, thanks for taking my question. So this is the first time for me also. Just trying to understand the merger with IIFL Securities, the rationale behind that. We first demerged, I realized, from IIFL Holding, and then IIFL Security. So could you just explain why are we doing this merger? What is it for?
Sure. So 5Paisa Capital was demerged from IIFL Holdings because then in the group this new entity was created because to cater to the digital side of the discount broking side of the broking business. and that's how 5Paisa Capital started its journey in 2015-16. But over the years, what we realized that a lot of things changed, and both the companies were ending up targeting the same set of customers digitally. We were 100% predominant digital, but IIFL Securities had one vertical which was the digital trading customers, and they also had other customers which are typically relationship based and all. So that's the reason we decided that there should be a dedicated focus for one business area or one target segment, and that's how it made sense for us to acquire the online retail trading business of IIFL, because that is a customer set which suits our business also, because most of them are millennials, and all of them are trading digitally on app. So that is the reason, that's the rationale behind acquiring that set of business.
And anything on the business front which will enable us to augment our revenue? Could you talk about that, please?
Sure. So as I said, we are acquiring close to 1.5 million customers, which will boost our base by around 40%. In terms of revenue, we are looking at close to around maybe 18 to 20% growth in revenues at the current revenue.
Sorry, let me rephrase the question. Sorry to interrupt you. Any diversification on the revenue front, I suppose, is the same, is it?
I'm right now not able to hear your question properly.
The diversification. So is there a chance that you will be able to sell more products? We get the broking point of view and the margin finding, but is there anything else we're getting more? Is the diversification point of view on the revenue stream, or it's the same? Or I'm not aware of IIFL Securities much. Is it allowing us to sell more products to a customer or something like that?
So absolutely, what we are acquiring is customer and the broking revenue, but it also opens up an opportunity to sell multiple products to these customers. So answer to your question is right. There's going to be an opening up of opportunity to serve the customers, but what we are acquiring are customers and the broking business, the broking revenue.
I see. And the promoter shareholding post the merger will be this. Could you just let me know? What will the promoter shareholding percentage be?
So it will not impact that much. It was it was 32.69% pre-holding, and after this it will be 32.45%. So slightly 0.24% decline.
I see. Thank you. Thank you for your time.
Thanks.
Thank you. Next question comes from Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, one question I wanted to understand is from an industry perspective, we are seeing a variety of changes. Number one is, as you mentioned, that the industry itself is acquiring 10% less clients in this quarter. And I think in our case, we are focusing on higher value, so we have probably degrown our acquisition rate at a much lower number, at a much higher number. So in terms of the competition, how is it shaping up? Because we have also seen some of the other discount brokers are sort of unable to acquire in the same pace as earlier. So if you can throw some light on, within the discount brokerage space, how are things shaping up? And second question is on, this regulatory possibility that we hear about, wherein, the transactions can be carried out from the bank account, which can have an impact on the margin book that you have. So if you can throw some light on that and how it will affect your business if it is implemented. Third question is on this IIFL acquisition. So you mentioned that it will increase your customer base by 40%, but any sense of the various financial parameters of this acquisition that you can give, like how much you are paying and what's the sort of revenue and EBITDA or PAT increase that it can cause to your consolidated financials after a year?
Sure. So, talking about your first question, see, if you look at the competitive landscape, the consolidation in the acquisition has already taken place. Broadly, if you look at, obviously because of the fatigue and the prolonged, great acquisition numbers, obviously at some point of time there was fatigue to become, to have to come in terms of acquisition, which is right now. But largely, if you see that overall the acquisition is consolidated, and between 4 to 5 discount brokers, a large number, almost 80-90% of the acquisition which is happening in the discount broking space is happening between the top 4 or 5 players. But over a period of time, what has happened is, it is important that are you looking at only acquisition as a matrix in terms of competition, or you're looking at deriving more revenue and value out of this. So a positioning is extremely important, and that's why that's how we differentiate ourselves, where we position not just as a broker who's acquiring any and every customer. We want to acquire a high intent driven customer. So though there is competition, but there is a consolidation, and that consolidation helps us to provide and helps us actually give, grow further in terms of growing our customer base and revenue. As far as regulatory is concerned, definitely there are a lot of changes which are happening, and there is obviously a white paper and there are consultations happening in terms of how the client funds can move directly from customer bank account to the clearing corporation. That won't impact our margin funding book or the brokerage, but that will have an impact on our treasury income. But I think, as someone also asked, that with all these regulatory changes, what exactly will happen? And obviously the cost, when cost goes up, it has to be factored in the brokerage rates. So we will see an increase in the brokerage rate from the flat 20 rupees, that most of us are charging. So it has to go upwards if we want to run our business, and with every quarter our compliance and our operations and other costs are going up. So it will definitely have an impact, but that will also mean that the brokerage rates and the charges that we charge to customers will go up. Lastly, on your question of the acquisition, we are, as I said, we are acquiring close to 1.5 million customers. Our expectation is that if you look at our current annualized revenue, that would have a positive impact of close to 18 to 20% in terms of income growth. As far as cost is concerned, we have already created an infrastructure which can take care of more than 2 to 2.5 times of the customer traded and the people logging in, and all the other parameters for a tech infrastructure. So we already created that. And as I mentioned earlier also, that I don't see a cost increment from here, even if we acquire. So with an 18 to 20% income, we see a good translation of that income directly into profitability once this entire scheme comes into play.
And how much are you paying for this acquisition?
So it's an all equity deal, and we are the ratio that we are paying to shareholders is in the range of 50:1. So for every 50 shares of IIFL Securities, the shareholder will get 1 share of 5Paisa. And if you just convert that, is broadly on our total equity base, around 60 lakh shares will be issued.
Understood, sir. Thank you.
Yeah. Thank you very much.
Thank you. Next question comes from Dev Shah from Itong Securities. Please go ahead.
Hello. Hi, am I audible?
Yeah, sure.
So my question to you was regarding the total number of orders that you all have received during this quarter, and if possible, could you give me the equity segment orders also for this quarter and the previous quarter?
I'm sorry, but we don't share the number of order information for any of our segments.
Oh, okay. Okay. All right. So I had one more question relating to the time. So, for example, do you all have any metric that that shows the time it takes for a newly acquired customer to be an active client? Is there anything like that?
So broadly, what we have seen from our past experience is that it takes not more than 30 to 45 days for a customer to get active. So if you're acquiring customers, most of them, almost 95% of people who want to trade will end up trading within the first 30 to 45 days. And if people do not trade in first 45 days, it is very, very unlikely that they will trade ever or they'll come back. That is like only 0.5%, 1% people will come after 45 days. But maximum, this is the time.
Okay. Okay. Got it. Got it. And last question. Out of these 1.5 million new customers that are going to be coming in through the merger, through the acquisition, sorry, could you give me a sense on how many of them will be active customers, are currently active customers?
Right now, it will be difficult for me to share that information because, as I said, that we have just, filed it to the exchanges. We are, expecting approvals. So once the approvals and, the shareholder approval, the exchange and also NCLT, post that we will be able to share that information. But for now, we won't be.
Okay. Got it. Got it. Okay. No issues. No issues. Thank you so much.
Thank you very much. I think we can take 2 more questions, operator.
Sure, sir.
And my last 2 questions.
Next question comes from Anurag Mantri from East Bridge Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. I had 2 questions. One, on the F&O side, basically you mentioned that your market share is about 3.2%. Any sort of indication as to what you're targeting this number to maybe go up to, and what are the sort of initiatives that you're taking? I've heard about your F&O 360, but is there anything else that you're sort of focusing on to drive this market share? Like, is there a cohort of customers sitting in the overall broking industry which you can sort of target with your pricing and your offering, etc., from where you're gaining market share? That's one part. And the other part is that if you can just help us, understand the qualitatively, if you can give us a cover of the F&O segment in the sense of, what % of your clients may be doing F&O, or within the F&O brokering ADTO or the revenue, what % comes from these good quality, so to say, that you define as of now, or what % is kind of HNI versus retail, or what type of like how many customers make money? Any qualitative assessment would be useful.
So your answer to your first question, obviously, there is no number in terms of what kind of growth I'm looking for in derivative market share because we put our effort, and once you are into acquiring high-end derivative traders or the good quality customers, sometimes you immediately get a market share rate, but that's why it would be difficult for me to put a number in terms of market share. But having said that, we have done a lot of things for attracting good quality customers and derivative traders. F&O 360 terminal is one. We introduced a product called Margin Plus, where in that product we provide 100% collateral benefit for customers who want to trade in derivatives. The 50% component of cash is something which is funded by us, on which we charge a meager interest rate of 0.03% per day on overnight, and intraday it is absolutely free. Then we have introduced a lot of order types which the traders like. We have tied up with the fintechs which provide a lot of tools and a lot of data. We have an open API architecture where the algo traders or the derivative traders can use our API to trade. We also have a subscription product, and there we charge the lowest brokerage in the industry, where we charge only 10 rupee as a part of our add-on packs, which is our Ultra Trader pack, where we just pay 1100 rupee on a monthly basis or around 10,000 on an annualized basis, and you get brokerage rate of 10 rupee, and you also get 100 orders free. So from charges to platform to product, to experience. We have done a lot of things to attract these kind of customers, and that's how you see a steady, growth in terms of market share over last 3-4 quarters. Lastly, I think your question was on the qualitative aspect. See, it is, it's again, I won't be able to share in terms of how many people, make losses or how many people trade. But broadly, as I was saying earlier also, in last 4 quarters, what I have seen is there is a consistent increase of number of customers trading into derivative segments. And though the percentage of customers who are trading in derivatives compared to my overall is not much, it is in the range of around 10-15%. But those are the ones who are, that overall absolute number is increasing, quarter on quarter. So it is not just the turnover which increases, but also the customers traded, which is increasing.
Sure. Thanks.
Thank you very much.
Thank you. We have a follow-up question from Tushar Sarda from Athena Investment. Please go ahead.
Yeah, thank you for the opportunity again. Couple of times you mentioned that you expect the brokerage rates to go up. But if we look at, the big players like Zerodha or Angel, they are minting money. So would they not actually reduce the rates to drive out other players on the markets because the competitive intensity is increasing in this space?
No, I don't see that brokerage rates are headed south at all. See, there are profitable players in the business, but we all have to understand a couple of facts. One is broking is a cyclical business. So last 2.5 years have been good for markets, and we have seen in the past, and I'm in broking business for last 2 decades. I've seen that overnight with any change in the market, you can lose almost 30-35% of your revenues. So if you are profitable now, doesn't mean that you will be profitable ever just by reducing the rate. That is one. Secondly, there are regulatory changes. Now, treasury income definitely forms a significant part of the rather less of the top line, but a significant portion of bottom line. Now, if there is any change which leads to erosion of the treasury income, automatically have an impact on the profitability. So I think us and overall the large brokers understand the gravity of the business and the cyclical nature of the business. So I don't see, despite so many players coming into it, the rates will go down. There might be marketing ways through which you bundle a product and you trying to position as the cheapest, by giving a lifetime something, or maybe you reduce the rate and then you pass. But it's more of a marketing. But all put together, I don't see the rates going down.
But they won't go up also, right? These players are hugely profitable and everybody's fighting for market share. So it's like a telecom battle which happened between the biggies, and the smaller players just couldn't survive the price war, right? I mean, you've been mentioning that the rates would go up, but I seriously doubt if they'll go
right
up.
Now, I think
Angel makes so much money.
See, right now it's more of a hypothetical situation, but obviously when we look at a lot of parameters of business, I mean that's my call. I may be wrong. I'll be happy to prove wrong that if we are able to maintain or rather increase our margins and ARPU by keeping the rate same, I'll be more than happy. But we are into a very dynamic business, so anything can change. And my response was to the answer in terms of what if there are changes. But in a steady state, I don't see a change in last 2 years and even now.
Okay. Thank you very much. Thank you for answering the question.
Thank you. There are no further questions. Now I hand over the floor to the management for closing comments.
So thank you very much all for attending our conference call. If there are any questions, you can write to us at ir@5paisa.com. I again wish you a very, very happy New Year, and may you have a great year ahead. Thank you very much. Have a good day.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.
Your conference is no longer being recorded.